Alright, what is going on, everyone? Welcome back to the channel. If you're new here, my name is Gerardo, creator of LookIntoHex.com. We'll be referencing plenty of charts from that website, so go ahead and pull it up in another tab and follow along. In this video, we're going to be talking about HEX and looking at its price action via the lens of Subcycle Theory. So help us get to 7,000 subscribers if you're not subscribed by now. We're almost there. Appreciate all the support. So when I say subcycles, we have to first of all zoom out and look at HEX and say, well, its price action is different, right? It's different than other coins that you may have seen, or it's different than other coins I have seen personally, because what you see is you have these really nasty dips, right? You can't deny it. For example, this one back here, there is this dip, this one, and you have these really insane dips, which when you measure them, you actually end up at over 80% dips on a few of these, and definitely anywhere from like 40 to 70% dips on a lot of them. And so you ask yourself, well, how quickly do they happen? And it's interesting to see that compared to, say, something like Bitcoin or Ethereum that takes a whole year to carry out its bear market and its full 80 to 90 to 95% dip, HEX seems to do them very quickly, right? In the course of, well, when we look at the data, we find that it's very quickly, but just by eyeballing this first one, you're like, well, it was a month and a week, right? This one obviously was much longer. And so when you average out, you definitely get some insightful data. So I'm about to reveal a bunch of lines that I don't want you to be overwhelmed by, because I'll explain what they mean, but you'll probably get an idea quite quickly when I reveal them. And they're these. So what in the world is this? Purple indicates a local top and red indicates a local bottom. So again, as you can see, we tend to have these mini cycles, as I like to call them, these subcycles, where you have a dip over the course of, again, just a few weeks, and then a rip, dip and a rip, dip and a rip, and you just keep dipping and ripping in these really short cycles. So what we can do is take a look at each of these subcycles individually and plot them and normalize their beginnings to each other from the beginning of every single bull rally as well as every single dip. And so we went ahead and did this, and this is what we get. So if we take a look at our dips, we'll start with those, start with the bad news and then get to the good news, right? So when you look at our bear subcycles, you see that clearly this first one was our nastiest. This was our post-launch dip. And then our second nastiest was this blue one, which was our post-big payday dip, I believe. And so what you see is that everything other than these two huge supply shock events have been on average this white dotted curve. This is your average dip. And it tells you that your average dip looks like, it is about, let's pull it up, about a 47% dip in 26 days, right? A 47% dip in 26 days. So roughly speaking, price cuts in half over the course of 4 weeks when it comes to dips. Okay, when it comes to dips. Now, our local top on HEX recently was 54 cents. So that's not saying we're in a local top, right? We're not saying that's the case. But if we were to have an average bear subcycle, where would that put us? A 50% dip roughly in 26 days. Well, let's take a look. Take a date and price range. And you see in 26 days, roughly speaking, that puts us at the 27-cent level. And you've heard that thrown around a lot, the 27-cent level. So that's just your average dip if we were to have this mini bear subcycle. Now, again, I'm not saying that is the case, just saying what it would look like if it were the case. Also, keep in mind, if you do a Fibonacci extension from our rally from about 8 pennies to about 54 pennies, I never thought I'd be saying that this soon anyways. Let's hide these moving averages real quick. But you can see that that 27 cent level would correspond to a retracement back to the 0.382 region. If you flip it the other way, it would correspond to the 0.618 region, which is a significant region, as is the one we're in now. So I guess the most bullish scenario would be, honestly, sideways. That would be the most bullish, in my opinion, is we just form a nice, whether it's a bull flag, right? Something like falling parallel channel, that would be bullish. Whether it's just sort of a symmetrical triangle where we tighten before exploding, similar to what happened back here. Or maybe an ascending triangle, which we haven't seen one of those in a while. I kind of miss them, honestly. A pretty ascending triangle, something like what happened back here, for example. So again, we could still see bullish formations, right? This doesn't have to be your typical average bear subcycle. It doesn't have to be. If it were, worst case scenario is it goes down to this, again, 26, 27 cent level, and it might not even go straight down. Again, it might do it in a more bullish formation, maybe in a bull flag type formation. You see something like this happen. Again, anything can happen. But again, my most bullish case, in my opinion, right now is simply going sideways. But let's get back on track to our subcycles, right? This could be a local top. It could not be. We don't know. But let's take a look at what our average rips look like. This is a little eye-opening. Our average bull rallies. So what do we have here? Let's take a look at this. You see that our average rally is about a 3.6x in about 37, 38 days. Well, this is interesting. Okay, so your average, this is interesting, right? Because your average pump is actually 6.8x, okay? But the average length of time your pump lasts is 26 days. So we really just, or excuse me, 37 days. So we really just took the average of the first 37 days. So you get two different averages. I just wanted to point that out because that's kind of important. But the point is, these rallies usually last around 37 days, but we've obviously had them last longer, 37 days on this one, 45 days on this one, 56 days on this one, and about, you could say 56 to 61 days on this rally. So we could still have some legs to go on the current one where we are now. It's actually this blue one right here is where we are. So again, we could say, okay, we've reached our average rally. Cool. Now it's time for a cool down phase, like I said. Or we actually continue on and do something like this, right? Or we continue on and do something like this, which is even more bullish, right? Let's target would be, what is that? Like 50% away, which is like back to our all-time high. Or is that the case? Hold on, 50% from here. Yeah, that sounds about right, about 55 cents. And then if we reached up here, that's even more bullish, obviously. That would correspond to something like the dollar plus region if we started reaching these levels up here. So these are just your typical bull subcycles, your typical bear subcycles. And that's not to say they can't be shorter, right? Because like I said over here, sure, you had your you have your average, but you also have your below average events. Like, let's actually find some of those just to point it out. Like this one. No, that's the wrong one. I'm trying to find, I found like this one right here. Check out this pink one, G, where it just dipped 40% and the dip was over with in about 2 weeks, right? And it just dipped 40%. So if you take a look at how much we've dipped so far, right? Let's take a measured move. It's about 30%. And let's zoom in here to make sure that's right. About 27%, right? When was I saying over here? We dipped about 40% and then we were done in about 2 weeks. So 40%, 2 weeks, about 30 cents. So again, I do think the 27 to low 30-cent region is very, very, very strong support, illustrated by this as well, right? It corresponds to these Fibonacci levels. So I assume these would hold, and then you would have another formation like this, right? Your bull flag formation, that when it breaks, it's go time. If we did form something like this, then obviously it would be go time, but who knows? It's too early to tell, right? If this is a mini bear subcycle or if it's a continuation of our bull rally and we continue to do something like this. Now, I'd like to see price go sideways. I'm just going to be real with you, and I'll explain why. Because if you look at a model like, let's look at our regression rainbows for a second. Actually, let's point this out first. Look at what happened back here, right? We had our, what we call our fractal, right? We ran up into the purple region of our regression rainbow after consolidating for a long time down here in a great reaccumulation zone. We ran up to purple, dipped back down to blue, to the blue ribbon, and then pumped into pink. Now what happened over here? Well, we rallied into blue and we had some wicks up into our actual equidistant blue and some candles close at our Fibonacci blue. And look at that, we're being rejected. So what if we came back down to our previous color, right? If we came back down to our previous color and it took us a few days, then we're looking at green corresponding to about 33.3 cents, right? In just a few days. So again, just some more validation for that idea that these 27 cent, 30 cent, 33 cent regions would be very, very strong support. I would assume something like 27 cents would probably be a wick. You might see 30 to 33 cents hold more with the actual bodies if we were to go down there. And again, we've already had wicks down to the 34.9 cent region. So the guys who are trying to get those prices are already being filled, right? Some of them have already been filled. So to go down there isn't guaranteed. Just keep that in mind. Take everything I say with a grain of salt. People who've called for HEX dips in the past oftentimes are wrong. HEX does interesting things. And again, we don't know if this is just a small dip in the middle of a bull subcycle or the beginning of a bear subcycle. It's way too early to tell, and I wouldn't put money on that just yet. So what else can we say about going sideways, right? Why I think that's a bullish scenario. Because look at what happened on our HEX versus ETH extension from FIT. A lot of people are pointing out this chart on Twitter because it's holding just absolutely incredibly. I wouldn't have expected it to hold just as perfectly as it is. I mean, just look at specifically once we had the impulsive move off of the yellow. If you can see what I'm talking about, the impulsive move off of the yellow straight through green, just like Ethereum did, hitting blue, just like Ethereum did, and having a pullback, just like Ethereum did. And if it continues to do what Ethereum did, then it ran up into purple, pulled back, and then ran up into pink. Again, that's not to say we're going to do the exact same thing, right? We've even played devil's advocate and said, well, something along the lines of what we said earlier, right? What if we pull back to green and bounce off of there and actually only hit purple, right? Because we're doing things one color lower. That might be the case, right? We might just hit purple and then hit a retrace, right? And it might not be a 3, 4, 5 month long retrace like something like this, but maybe this fractal is just more methodical, right? Because instead of just having a rally of, what is this, like 12x in a month, instead of doing that, once we broke out of this region, right? Maybe this takes a few months, 3 months, for example. So if, say, let's see, in this region we broke out of orange, right? And we had our 11x, let's say, in a month. Over here, we seem to break out of our consolidation around here, around the yellow region. And if we were to have a 12x, again, in a month from where we broke out, we would already have been at, what is that, at like $1.33. We would have been at that yesterday. So again, the angle of attack isn't as steep, as powerful, as sharp, but nonetheless, we are still in a highly appreciating asset, clearly, if you can tell from this chart by now. And so again, if this takes twice as long, 3 times as long, then we're still talking about $1.30 HEX in maybe October 11th, maybe November 11th, right? And that would correspond to something like this over here, right? $1.30 HEX, October 19th. It would correspond to something like that. Maybe we come here to green, consolidate a bit, and then rally up into the purple and have a HEX above $1 in October. That would be really, really cool, right? So maybe it doesn't hit pink, maybe it does, who knows? Only time will tell. It's too early. But what I do see already that you could argue this fractal is currently playing out, and it has been playing out. It's just not as steep. And so some people might not expect it to actually be the fractal itself before it's too late. By the time maybe it's up here, they'll realize, maybe think it's the top, and then it starts going, still going, and people realize, oh, this was the fractal this whole time. He's been right since literally April, and at that point it's too late, and you have $2 hex. But you never know, right? This model could break and we could go above it. We've seen people with more bullish models than mine, literal parabolas on a log chart, so that's definitely something else. But that's pretty much all I wanted to say, was that if we went sideways, it would also converge with our quarterly ROI here, where, I mean, just look at how these quarters ended at about a 4.6x. We're at a 5x right now. So again, more or less going sideways. It would be interesting to watch it pretty much just end up around here. And again, we might actually cross above and have our highest performing quarter to date. Who knows? That would take 60-cent hex to accomplish. And we are in a pretty nice uptrend. Right, it's been a roller coaster, highest performing, and then down to our lowest third, and then top 2 currently battling for second place with last quarter, interestingly enough. And so we'll see where we end up. We still have about 18-19 days left in the quarter. I have to add the average back. I don't know why it got rid of it on this chart, but it ends up around here, right? So we're actually above average right now. And if we continue, then if we continue performing above average, who knows? We might be lucky and see 60-cent hex. I mean, we already saw 54-cent hex. So we'll have to wait and see. I think that's all the charts. I think those are all the charts I wanted to pull up for you guys. This is another one. Again, just another sort of validation for, well, we might go sideways for a bit here on the HEX versus ETH regression rainbow. It's saying if it were to track it perfectly, that we would go sideways until about September 25th. So a couple weeks of sideways motion, consolidation between the, again, 35 to 50 cents, hopefully. And maybe hopefully we see a bullish formation like this, just some nice sideways action, create some market structure after this huge move we just had. Don't forget, we just went up like 4 or 5x. So let it cool off for a bit before hopefully a tear into the end of the year, and maybe Q4 will be the time where HEX continues to shine as it has been all year. But I'm going to end the video there, and yeah, take a look at the charts, right? There are so many charts to look at. We could talk about these all day. Just updated the heat maps. You can see we're just green as we were here before. We still had some room to grow, so that keeps me bullish as well. Makes sense that we stalled out here on our design of 10,000x, about the 56-cent level. We stalled out around 54 cents, so it's understandable. But hey, right, we haven't had to wait long for all-time highs in the past. You can see clearly here by the amount of time these ceiling functions go flat, and stakers already crossed the 10,000x point. They're sitting at around 17,000x. So go ahead, check out my videos on staking if you're interested in that. Go check out the website, LookIntoHex.com. Check out the VIP list option we just launched about a week ago. Again, we already have about a dozen people in there. You guys are enjoying it, liking the charts, liking the trading view indicators you get access to, the private dashboard, and we actually just dropped our first weekly Sunday video update, just private videos for the group. We just dropped one of those about 30 minutes ago before this video. But yeah, check out the site. Let me know what you think of these models. Do you think we are at the beginning of a bear subcycle? Just be real. Do you think we're at the beginning of a bear subcycle? How long do you think it's going to be? An average one, below average, above average? Do you think maybe we're still in a bull subcycle and we're still in this sort of fractal thesis where we rally over the next, few months into the end of the year? I'd love to know your thoughts. Yeah, but stay level-headed is my best advice, because I mean, just zoom out, right? Just zoom out, and if you just get rid of all this, I don't want to say nonsense, but all this noise, right? And you just look at it on, let's say, like a linear weekly chart, things look good, right? Things look good. You can't be down more than, literally more than like 5% if you're someone who cannot look at your portfolio for like a week, right? So, and if you look at it on a monthly chart, right, the averages are just nuts. I mean, it's just straight up, more or less, right? But yeah, do your own due diligence, take a look at the charts yourself, interpret this information however you interpret it. Thanks so much for watching. Subscribe if you're new. Let's get past 7,000 subscribers, and I'll catch you in the next video. Peace.